Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 28th of January. Starting off with the FTSE 100, which is actually up after yesterday's China crap bot spoof that we had, which obviously pulled the rug from under one or two US tech stocks. But in terms of the technicals here, not bad. The bounce for the FTSE basically on the May resistance there, so just below 84.74, and then we're back up again. This looks like a mid-move consolidation ahead of a move up to the top of that rising trend channel from the autumn of 2023, 87.20. Best case is up to 9,000, I suppose, by the end of the first quarter. And on the downside, hoping that if there is any further rug pull, it won't be anything lower than 8,400. Moving on to the DAX, and here one would assume that this market would also manage to keep itself on a steady course. We had the gap fill rebound yesterday, so bouncing off the floor of that gap there around 21,100. Looking for progress within the steeper red rising trend channel from October. That's heading towards 22,000. We're hoping for that by the end of next month, while we remain above 21,000. Worst case, we've got to test the floor of the channel from October at 20,800 before heading higher. On to the Dow, and here you can see that actually managed to stay above the 50-day moving average, 43,500, as we were hoping we would, and still within spitting distance of the best levels at the end of November, beginning of December, just through 45,000, hoping that this market will head up to 46,500 by the end of next month, while we're above that rising 50-day line on the Dow. Moving on to Bitcoin, and here you can see that we did what we have always factored in, which was a bounce off the 50-day moving average there. That's around the 98,000 level. Went a bit below that. Still have the chance of a dip down to the rising November support line there, 93,500. But hopefully the bounce that we've had from just below the 50-day line will be analogous to the bounce we had below the neckline support there at 92,000, and we head higher, basically in a range between the 50-day moving average and the latest peak around 109,000. And one would expect the market to be in a sort of pinball action between those 2 points. RSI at 53, so the technical glass half full rather than half empty, which explains yesterday's bounce for this market. Moving along to gold, and here we've been hoping for a retest of the best levels, and that's what we've sort of got, 27.95, basically the peak yesterday, and we're still going for 2,800 plus, while we're above 27.50. Best case is up to 29.70 by the end of next month. We've got the 50 and 200 day lines rising in parallel. We had an RSI 50 rebound. In fact, we have two of them so far this month, so looks pretty strong on gold. Moving along to the stocks, and starting off with one which I presume hardly anyone's heard of, which is Airea, and here you can see that we've got a bear trap gap reversal from below the old December 2023 support at 21.5. Above that, looking for the top of that broadening triangle, 38 pence by the end of February. Relatively simple setup there. Moving on to Block Energy, where it's been a case of multiple attempts at breaking that trend line there from back in May. Maybe perhaps rather foolishly, we're looking for this one to be the lucky break, an end of day close through 0.78, and that May resistance line could take us up to a penny by the end of next month. Ideally, now we stay above recent resistance at 0.7, so if you see the stock back below 0.7, you'll know that it wasn't fifth time lucky for a potential breakout. But we do have that rising trend line in the RSI window, and that should hopefully kick in either on this attempt at breaking out or very soon. On to Beacon, which had a good day yesterday, and here we can see that this is a market that is encouraging on the basis of the move within that rising trend channel base. We've already got the 50-day line rising sharply, and we've had support at or above, in fact above the 50-day line since the last week, since Christmas basically. Above recent resistance of 0.0048, we're looking for 0.0 0.008 by the end of next month, or hopefully much sooner. But this does look like a very strong turnaround with that sideways shuffle above a rising 50-day line. We've also had a bounce off RSI 50, which is another leading indicator on the upside and explains yesterday's move. Moving on to Chesterfield, which is not the most liquid stock on the market, but you can see that we have made an attempt at breaking higher. We've had a gap close buy signal there around 0.32. We've broken above the 200-day line at 0.36, and above that 200-day line looking for as high as 0.7 pence, perhaps by the end of next month. A punchy call there, but maybe it's worth being punchy now and again. On to Dialight, which I think had an announcement today. Here we've got Bear Trap Island reversal, so gapping down to new lows, which we had last month, and then gapping up now. So it looks as though shorts may be caught short. And here at the top of the triangle there, up to £1.47 by the end of next month, the longer we stay above that 50-day line at £1.04. Ideally, there's no breakback below the recent resistance at 94 pence at a stretch. Moving on to a stock which is perhaps one of the strongest around at the moment, maybe an unlikely candidate for being strong, but here we have Emerson, and here it looks as though we got follow through on that unfilled gap to the upside that we had to start the year, and a sideways shuffle above a rising 50-day line, which, as I just said a minute or two ago, is one of the strongest setups you can have near the base, looking for at least 1.55 pence, while we're above the initial January peak there at 0.89. Very exciting looking setup there. Moving on to Halfords, which I suppose is a play on the ongoing stealing of bikes, which seems to be going rather well at the moment. We've had an unfilled gap to the upside there. End of day close today above the 200-day line at £1.45. Could be enough to take the shares up to £1.77 by the end of next month. If we do fail and go back towards that 50-day line at 135, then just have to wait for end of day closes above the 200-day line. Moving on to a stock which I haven't looked at for a while, which is MobilityOne, and here you can see a broadening triangle base, and obviously not much liquidity here, but it is a bear trap rebound from below the August support there at 2 pence, above 2 pence, looking for 3.25 pence by the end of next month, and hopefully that will happen despite the lack of liquidity there. Full marks to everyone whose psychic powers and crystal balls worked yesterday, and here you can see that Nuformix through the roof today after the RNS that the companies had, but yesterday the shares managed to mysteriously break through resistance at 007 and close with within spitting distance of the 200-day moving average at 0.12. Above that, we're looking for the top of that broadening triangle, in fact, top of that rising trend channel base at 0.24, hopefully over coming days. If you're a fan of the shares and looking for greater glory, then that would be up to that gap there, the gap down that we had back in January last year in the 0.35 area. So you could actually say the levels here, 0.12, 0.25, and then 0.35. Moving along to something which is not quite so contentious, and it is Microlise, where I don't think there was any buying yesterday before the announcement. Here you can see that we are breaking out of that falling wedge that we've been in since February last year. The level there, just around £1.14, so just below where we are at the moment. Above that, we could head up to £1.40 by the end of next month, while we're above the recent November support at £1.10 on an end-of-day close basis. Moving along to a stock which is perhaps not quite so exciting at the moment, but we've got that rising trend channel there from June for SRT. Top of the channel there, heading for 70 pence, looking for that by the end of next month, while we remain above a recent support at 50 pence. Ideally, we stay above even 52 pence on that situation. Trellus, one of the big charting wins and fundamental wins of late, and here we've got this problem with the first target there, was the second target there at around 3 pence. Need to see an end of day close above that to then unleash the chance of retesting the best levels of the month, but not only at 5 pence, but then maybe up to even 6.25. But I think the thing there is to wait for decent end of day close above 3 pence. We should get that given the way that we've got the 50 and 200 day lines both rising at the moment into a golden cross, hopefully over the next week or two. Onto a stock which I think nobody looks at apart from one person I've seen on Twitter, and that is URU Metals or URU Metals. Here you've got a rising trend channel, top of the channel there, heading for £2.80, which I suppose is a valid target while we're above recent support there, £1.50 on a mid-close basis. We've gapped up today, so maybe it's time for a little move on URU. Finishing off with Wicks Group, which had good reaction to its trading update today. We've got a rising trend channel there, and what's noticeable also is the way that we're in a run up to a golden cross, so hopefully we will get that top channel target, £1.82 by the end of next month or even sooner. The other point to note is we've had an RSI rebound at neutral 50, so that should give a bit of, will provide a bit of gas in the tank for the bulls. Ideally, we stay above at least the £1.60 level, whatever happens there. That's it from me today. More updates tomorrow.